Hello everyone, this is Osama Rizvi coming to you from Primary Vision Network, and welcome to another episode of the Monday Macro View. In this week, we are going to discuss one of the most important and significant developments, which is the return of US-China trade war. Now, it is important to see that if you look at our articles at primaryvision.co, mine articles, Marks Insights, the Econ Show, and otherwise, we have been talking about the existence of this tail risk from quite a while. So the trade war never ended, essentially, but it was always there on the back burner. However, recently it has come to the fore. It has surfaced back, and as a result of US's restriction on Chinese companies, China has also posed restrictions on two of the most important critical minerals, gallium and germanium. As you can see on this chart, it's not only that the US is dependent upon those on its supply from China, but also the European Union, which, as you can see, which is dependent on China for a huge amount of these elements. Overall, these elements, the rare earth elements of which China controls the 80% supply, all of these are very significant to the modern economy, from LEDs to microprocessors to semiconductors to other modern equipments, mobile phones, batteries. Lithium is one of them. So it's not always that when you look at the size of their markets, it's not quite huge. In fact, in terms of oil and iron and copper, they are insignificant. However, it is their properties, the characteristics that are hard to imitate, and there aren't any substitutes, especially for these two. So China produces around 60% of the world's germanium and around 90% of the world's gallium. Both are important, as I've said, in semiconductor industry, in the chip manufacturing industry. And US, although it has some other alternatives, which we'll discuss below, is still reliant if you take an example of germanium, over 50% reliant on China for its supply. The next chart, when you look at it, is very insightful because it shows that there are two types of supply. First is the mined supply, and the second is the refined supply. There is some difference because when you look at the mine supply, there are other countries that holds importance as well, like African countries, Australia and DRC. However, when you look at the refined supply, China dominates it. And China is also present in the mine supply side. Overall, even when you bifurcate the supply side, you see that you cannot take China out of the equation. And what sort of implications can this bring? This can, for one, and immediately make things expensive, make all the electronics thing expensive around the world. We had this previously as well when there was post-COVID-19, there was a chip shortage across the world. And from cars to iPhones, all of these either faced delays or were, quite expensive. In terms of the revenues or alternative resources that US or European Union can look at, they have Canada, they have Tennessee, some Latin American and African countries. But the problem with this industry is that all of the developments, let's say US wants to become independent in their rare earth supply, it would take years before that happens. Billions, hundreds of billions of dollars of investment and a lot of time. And that is something that the global economy especially cannot afford. When you look at the prices, and I was just talking about implications, you see that just after the announcement, in 1 week, there has been a 27% jump in the price of gallium, which would evidently result into higher costs for producers and then the consumers. All of this is happening, interestingly, against this background where Yellen has visited Beijing, first time as the US Treasury Secretary, and this is the headline, as you can see on the screen, which says that she was quite hopeful regarding the US-China economic relations. However, in the background, the things that we've just discussed that were happening. But there is a bigger threat to this as well, as always. So you see, from 2001 to 2021, the trade between the US and China has increased from $100 billion to $500 billion. In fact, in 2023, the trade between both the countries hit its highest record level ever at $691 billion. For China, this has resulted into tremendous gains, with becoming the second largest economy in the world and pulling out millions of people out of poverty. And for the US, it has also resulted in a smooth and at times cost-effective flow of r- raw materials, and they have benefited as well. Of course, there is a downside to it, but this is the reality. So from the past 21 years, despite all the rhetoric against the trade deficits, all the developments in the trade war, the trade has continued to grow. And one of the reasons, as this article by New York Times pointed out, is the chip industry, because the laptop or the phone you have, the TV you have in your room, everything almost, the cars, I mean, an average car have around 1,400 semiconductors in it. So all of these modern developments have made the industry of semiconductor quite relevant. However, the semiconductor industry is very specialized. Taiwan makes a lot of them, and then China and Japan and South Korea. So it makes it highly concentrated, and that is why it is quite vulnerable to changes. And Japan and Netherlands, which are home to companies that make advanced microchip equipment, they are now also putting restrictions over Chinese companies. So this is how it goes. So there are no winners in this regard, but hopefully saner heads will prevail soon. When you look at the US's import, construction from China, you see that electronics dominate. Then there are machinery and appliances. So all of this once again highlights how important this development is. But I want to mention this, that we need to look at a lot of other elements as well, a lot of other factors as well, before we can truly gauge the effect of this development. It's quite early to say that. For instance, we have to look at the stockpiles, we have to look at the alternative resources. There is Canada, there is Germany, there is, I've told, African countries. How long will it take? And also whether the US needs all of these materials in the coming years or not. So there are lots of ifs and buts to truly gauge the impact of this development. However, it is bearish for the global economy. And lastly, before going into the market sentiment tracker, you see that Japan and South Korea are the largest importers of these two elements, and they have had a lot of emergency meetings, their governments, and they're putting their heads together to find out the alternatives for these. Finally, you look at the market sentiment tracker, the recessionary side continues to outweigh the recovery side. The chip war has escalated, the global markets are down, Eurozone has slipped into contraction once again. China's producer prices sink recently once again. The US auto production is down, is still down, wasn't able to reach the pre-pandemic levels. On the brighter side, all prices have increased. The US job market is still strong. There is some sort of recovery as US's non-manufacturing ISM index posted some gains, but recessionary sides continue to outweigh the recovery side. That's all from today. We'll see you all next week.